Hey there guys, my name is Marcus, and in this video I'm going to compare SDIV with VIG. I'm going to compare expense ratio, holdings, and then also the fund overlap, backtest performance of how both of these ETFs were performing, so you will learn it all. Now if you want to learn how you can make money with ETFs, I created a course and you will find the course down below in the description. So without further ado, let's start. Here, SDIV, VIG, different issuer and definitely less expense ratio. What do I mean by that? Let me just open this thing. Here, when we see VIG, we can clearly see that the expense ratio is much lower. It's cheaper. So 0.06% comparing to 0.59%. 0.06, so let's say that if you would invest $10,000, you would pay $6, but with the SDIV, you would pay $59. So even when you would calculate like this, $10,000 invested in a year and like this, $59. You can see it here. Assets under management much higher with VIG and even the average daily volume. So in every single one of these regards, VIG is better comparing to SDIV. But let's see, many times when there is an expense ratio higher, maybe the performance is going to be better. We will see. Number of holdings 199 comparing to 270. Average spread is in percentage 0.08 to 0.01. And let's see how it looks like in sectors. We see right here that SDIV got financials, energy and basic materials, consumer non-cyclicals. They have real estate right here, weight 39%. Then you see also country breakdown right here. United States, China, Hong Kong, Russia, Britain, Brazil, Australia, so many other countries. On the other hand, it's a little bit different with VIG, much different, and we will even see the fund overlap right here soon. And with the VIG, you see technology, industrials, healthcare, consumer cyclicals, consumer non-cyclicals. So you see that there are completely different segments. And when we look on the fund overlap, VIG, SDIV, we see that they are not overlapping at all. Nothing. They're literally different ETFs and 0%, 0 holdings, 0% by weight. And you can even see it in those companies right here. So they are focusing on completely two different segments. And quality score 3.19 comparing to 7.18. Now when we look here on backtest performance, and let's say guys that we would invest $10,000 and then we would invest $500 monthly, and then we would also reinvest the dividends. So how it's going to look like? VIG analyze portfolio, and we can see clearly that, look at this, with the VIG, you would make $93,000 more comparing to SDIV. So this is huge with reinvesting the dividends. And now this is the one thing about SDIV, that you don't have really the growth potential there, that you are focusing primarily on dividends. That yes, the dividends, we will get to it, are really good. But when you look on the growth and when you look on this number, you can even see that, okay, the VIG is a really good call to invest to, really good ETFs comparing to SDIV. Now you can see even 2012 and even 2016 was better comparing to VIG, but when you look on the 2013 here, and every single year it outperformed SDIV, right, pretty heavily. Now, when you look on dividends, that yes, they have really great dividends. So 5,000, 4,000, 5,000. So if you don't really care about the growth and you just want to have a paycheck every single month, let's say, I completely understand the strategy of investing to dividends. And that's another thing, right? The dividends are really huge. Now, when I'm gonna show you the dividend yield history, and we reinvested everything, you see like 2019, 5,800 comparing to 1,857. But yeah, 2019 was really great from the dividends perspective. But when we reinvested, when you look on the growth of the whole market, you would still lose money. Not lose, but VIG would outperform you. And now, when we go further and when we look on dividends here, we can see that yes, 8%, 8.26, 9.22, 6.66. And dividend yield that is not really high with VIG here. 1.63, 1.71, 2.08, 1.88. Dividend growth rate is not really good here, right? C minus. And you can also the dividend growth here see how well it was growing. When you look here on dividend growth, it's growing better comparing to 10 years, let's say. Look at this. This is the dividend growth of VIG, and this is the dividend growth of SDIV, right? So from my perspective, it's a no-brainer to even invest to SDIV, and I'll be damn honest. Like, I don't know how people can invest into it, but I'm always comparing videos, and every single ETF is outperforming SDIV. That it's an illusion of high returns. It's like when VIG, QQQ, TQQQ with triple average ETFs, in many other, what SCHD is that ETF also. This is SCHD analyzed portfolio. Even SCHD outperforming really well. So definitely like choose that even if you want to go. And when you look on a SCHD, look at the dividend history here. And look at the dividend history here. Why would you even invest into this? And then dividend scoreboard, A plus, B plus, plus. Then dividend yield. Yes, the dividends are really good with SCHD. So when we compare it, SDIV, to summarize it, higher expense ratio SDIV, less assets under management, less liquidity, less average daily volume. Focusing on international stocks here. And VIG got well-known companies into it. When we look on the performance, it's, yes, the only thing is like dividend. But again, you see that the returns here on dividends and dividend growth, the growth is not that great, right? So momentum also not that great, relative strength. So yeah, thank you very much guys for watching, and I hope you're going to have a great day. And let me down in the comments your thoughts on SDIV and VIG. We'll be happy to hear that. And have a great day and goodbye. See ya.